All right, we're going to give everyone just a few minutes to log on before we get started. All right. We will go ahead and get started when people can log on as we're starting. So I want to welcome everyone to our webinar, Balancing Loan Repayment with Life Choices, presented by ASDA's Career Compass. All attendees are muted so that we don't pick up any background noise during the program, but the webinar will be recorded and posted on ASDA's website, and a link will be emailed to everybody who was registered for the program. So I'm Danielle Bauer, and I am the facilitator for tonight's program. There we go. So I am ASDA's Director of Membership and Marketing, and I have been with ASDA for 10 years. And tonight we have 3 panelists who are new dentists, and they are going to be sharing their experiences and balancing their loans with family life, buying a practice, residency, and more. And then at the end of, they're each going to share a little bit about their experience, and then at the end we will open it up for questions. So as far as the questions go, you'll see that there is a control panel on the right side of your screen, and you can go ahead at any point and type a question in there. After each of them present, we'll take them in the order that they are submitted. So our first panelist for tonight is Dr. Brenna Keever. And Dr. Keever was raised in St. Augustine, Florida. She attended the University of Central Florida, where she majored in microbiology and molecular biology with a minor in American Sign Language. She then attended dental school at LSU School of Dentistry in New Orleans. While in dental school, she spearheaded campus-wide involvement in ASDA and was also active in volunteering and intramural sports. Following graduation from dental school, she was accepted to a position at the Birmingham VA Advanced Education and General Dentistry Residency. And there she served veterans while furthering her clinical expertise in complex treatment planning, dental surgery, implant placement, and endodontics. And aside from dentistry, she and her husband enjoy cooking, kayaking, hiking, playing sports, and attending church regularly. All right, Brenna, I am going to turn this over to you.
All righty. All right, guys, so this should be working now. And so today what I was going to talk to you guys about was just my experience and what I've gone through as far as finding sanity in finances. So I know you already heard my background, but basically what I wanted to get at with this slide is the fact that I graduated undergrad with no debt. And then I went to dental school and I graduated with more than $200,000 in debt. I also married my classmate who graduated with more than $200,000 in debt. After that, going to a residency, I wasn't going to be making a lot of money. So after that, next step was panic. And it's like, how do I manage all of this debt? 6.2% was my average loan rate, and low income during residency. And then you're looking at what are my goals? I'd like to eventually own a practice. I'd like to get a new car because my AC keeps breaking and I live in Florida. And I'd also like to get a home someday. So these are all different things that I'm trying to balance and I'm trying to manage with my husband. And you're wondering, how am I going to ever afford any of this? So my next step was I reached out to some resources. So I called Bank of America dental practice loans. I called Bank of America doctor home loans, which is a thing. And we met with a financial advisor that was connected with our disability insurance. And this all cost us nothing. And we were able to find out a bunch of really great information about practice loans, about home loans, and about kind of what to expect when you go out into the real world. So with all of this, this is the summary of the best advice I was given. If I was able to tell you just a couple of things that I'm glad I found out and that I'm glad I know now, these are the things. I'm not a financial advisor. This is the information that I got from people who know what they're talking about, but this is just the tidbits that I like the most. So the three things I'm going to talk about are developing a budget, refinancing loans, and saving for your goals first. So first of all, developing a budget. This is super important for a number of reasons, but if you're looking to pay off your loans, if you don't develop a budget, you're not going to know how much you can afford to pay off on your loans. Now, the reason that this is important is because with loans, you're going to be given a bunch of options when you go to refinance. And they're going to say, do you want to refinance for 5, 7, 10, or 15 years? And you're going to be looking at all these different brackets, wondering, what can I afford? So, for example, a 5-year term is going to be a lot more expensive per month to pay off than a 15-year term. And you may look at that and say, shoot, a 5-year loan, I can afford $3,700 per month right now because I'm not spending a lot. But if I want to buy a practice and I want to buy a home and I want to have a new car or any of these things, you have to consider those things. So for myself and for my husband, we both selected the 15-year term because it gave us the most flexibility as far as future costs. Now, that doesn't mean that you can't put more money towards your loans and pay them down faster. But with this, our opinion was that we'd have more flexibility in what our future goals were. Now, to develop our budget, what we use mint.com. What it does is it takes all of your different credit cards and bank accounts and loans, and it compiles it all into one place so you can manage all of them at the same time, which is really nice when you've got a bunch of different cards and you're trying to keep track of how much you're actually spending. So when it comes to refinancing loans, when to do it really matters. So for me, I was in a residency, and the advice we got was don't refinance right now. As a resident, you're not going to be making much, and your rate will be a lower refinance rate because your earnings, once you graduate, you're going to make more money, so you'll be able to refinance for a lower rate. The bad side of that is while you're in residency, although you do have a grace period, that means that you're not accruing or you're not in default of your loans. You don't have to pay them, but you are accruing interest. So those are things to consider, but it's worth the trade-off. So after you finish residency or after you get a job, their recommendation was to wait 60 to 90 days after you've started. So this will show the refinancing companies the trend of what you're actually making, better than just your first 2 weeks out. Your first paycheck is probably not going to be as good as what you'll be producing 2 to 3 months out. You also have to submit 2 pay stubs in order to refinance. So in order to get even approved for anything. So that's something that you're going to want to consider and you're going to want to wait for until 60 to 90 days after you started your job. And nice thing is that the ADEA offers has partnered with Laurel Road, and you get a 0.25% discount off your refinance rate. And I know 0.25 doesn't sound like a heck of a lot, but when you're talking a massive amount of money, 0.25 can make a big difference. So we did look into Laurel Road. It was the best rates that we found. I'm not endorsing them. I'm not, anything like that, but they were the best rates for us, and that 0.25% discount was really nice. So final thing is to save for your goals first. And so this was a little bit confusing to us initially. We looked at we want to pay down all of our student loans. That's the thing that we wanted to do. We wanted to throw all of our money, any income we made, we wanted to throw it at our loans. And all the financial advisors said, pump the brakes, save for what you need for your practices or for your primary goals. So what does that mean? For a practice, you're going to need a certain amount down. So if that's something that is on your goal list and you say, 1 year from now, 2 years from now, I want to be able to buy a dental practice, you're going to have that down payment available in your bank account. So for that, typically you'll need about 10% down. So what we did is we put all that to the side, any money we made, put all that away so that we have enough to buy a practice. Now past that, if you want to purchase a home, you need to look into how much home do you want and what can you afford. So you're going to look at your budget. You're going to look at different home loans and their percent interest rates. Doctor home loans, that's something Bank of America does. They require less down. So you may only need 5% down. I know this is a lot of mumbo jumbo right now, but all of these percentages add up to what you need to have in your bank account in order to secure your future and your goals. And then once you get past these steps, past the 10% for your practice, 5% down, however much you want to spend on a house, then you can actually start looking at paying down your loans. So final things, whenever you're looking at paying down your loans and saving all this money, you're going to have a lump sum of cash, and you don't want this in your checking account. You want your money to be safer than that, and you want it to be more productive than that. There are a lot of places you can put your money. A savings account probably won't gain you a lot of interest, but there are money market accounts, just different things to look into. But you just don't want it sitting there in a checking account, because that's a big security risk. Somebody can steal your debit card and steal tens of thousands of dollars of money that you're saving for a practice or a home. So just be smart about it. Look into your options of where you can put this money that's not a big security risk. And you want it accessible. So for us, a money market account was really nice because there's no penalty for us to take it out, and we earn something like 0.5% on it, which is more than nothing. And another thing, don't forget to have a safety net. There are surprises that can happen. Cars die. My car died, which I wasn't too sad about with the AC not working anymore. But something that always stuck with me was Chris Salerno. He said, I get paid $600 a month not to drive a Range Rover. And so I didn't go out and I didn't buy a Range Rover. I have a nice Mazda 6, which I love, but it's a 2014. It's awesome. It drives nicely, and I save a lot of money a month compared to some of the new cars I could have driven. So just things to keep in mind. And then the last thing, credit cards are not evil. So if you manage them correctly, you can be earning money and building credit. So you definitely want to have a good credit score with the things that you're wanting to invest in, such as a practice and a home loan. And if you're smart with your money, you can have, extra couple $100 a year building up. That's just coming from what you normally spend anyways. So here are some really good links that I kind of alluded to in this presentation. If you want to know how much house you can afford, NerdWallet is really good. As you can see, I kind of like them. NerdWallet, how much house, NerdWallet credit card comparison. That's what we looked at to see, what has the best interest rate return, what has the different things that you can look at for what cards fit you best. Then this Game of Loans, Interest is Coming. This is an article I wrote. If you are curious about refinancing your loans, if you don't know a lot about it and you want to know the pros and cons, I linked to it in a Google Doc because the blog that it's originally hosted on, part of it's cut off. So for right now, you can access it on the Google Doc in its entirety. Last thing is another article that I wrote for the blog, and it's how to find a dental job that's not on the internet and how to avoid contract burns. These are just things that coming out of school, you're just going to want to look into, making sure that you have a good opportunity and that you're not getting messed over in the contracts. So that's all for me. I hope that helps you all out. Those are the best things that I learned from any financial advisors.
Great. Thank you, Dr. Keever. That was some good advice. All right, so next we will move on to our next panelist, which is Dr. Ryan Dolby. Dr. Dolby is a general dentist and practice owner in Eagle, Wisconsin. After graduating from Marquette University in 2011, Ryan experienced life as a resident, private practice associate, faculty member, and corporate employee before ultimately starting his own practice from scratch. He served as ASDA's Speaker of the House and helped create ASDA's first National Leadership Conference in 2012. Dr. Dolby is married with 2 sons and has a dog, Cooper. So, Dr. Dolby, I am going to turn it over to you. So I'll put my screen back up. There we go.
Hey everybody, it's Dr. Dooley here. I don't have a presentation for you tonight. I just wanted to take 10 minutes or so to tell you a little bit about my story and maybe give you a few insights on how to balance life choices with debt, which is what this is all about. So my story starts when I graduated in 2011. And looking back on dental school, you know, one thing I probably would have done differently is tried not to spend so much money, because I came out of dental school with over $300,000 in debt. At the time, it all seemed acceptable, you know, what I was spending money on. I didn't live in an expensive apartment by any means. I didn't drive an expensive car, but it's amazing, you know, when you're going out to the bar, you're, you know, doing fun things on the weekends, how you're just willing to spend money that really isn't your money. It's all borrowed money. So I would have looked for ways to probably be tighter with my budget in dental school, and that would have made the size of that debt a little bit smaller and easier to manage now. You know, now that I'm 7 years down the road, I see things a little differently probably than when I was in dental school. So that was the takeaway coming right out of dental school. After dental school, I went to a residency in Arizona. And I did get paid a little bit of money in the residency, but it was really just enough to pay my expenses. So again, I lived in a very affordable condo and drove the same car that I was driving in dental school out to Arizona from Wisconsin. And didn't really live beyond my means, but I wasn't really making any progress either. So my debt was in forbearance during that time that I was in school. And another thing I probably would have done differently looking back is I would have still tried to just make interest payments at least on that debt, because again, that would have controlled the momentum of that snowball, and it would have really paid off in my position I'm in now. So it's always easy to, you know, look in the past. Hindsight's always 20/20. But you know, you have the beauty of hearing this message now, and you're in the position you're in dental school where it's not too late. I mean, you can still make some of those little changes, and they add up to big differences later. So coming out of residency, I wanted to find an associateship back home. I looked for a job where I thought I would have the potential to maybe buy in and be the owner. I wanted to know that from day one, because I didn't want to spin my wheels in an associateship where there was no future for me, there was no potential. I figured at some point I would get comfortable enough where I wanted to take on the responsibility of ownership. And I realize nowadays that, you know, some dentists, that's what they're interested in, and other dentists are more than happy to be an associate. And I think either route is fine. We'll probably come back to that ownership piece later, but bottom line is I started making some money. So I was an associate, and I was seeing a paycheck finally, and it was bigger than anything I'd ever earned before. So I felt like, wow, you know, I'm a dentist now, and and I'm finally able to start making some payments on my loan. So I did. I started making modest payments toward my loan, basically paying the minimums where I could, but I was still nervous. So I still kept the loans in forbearance and basically used up the entire 3-year period that I was given for forbearance. And even though it was in forbearance, I was still making loans, but I was making them on my own terms and on my own schedule, where no one was holding me to a minimum payment. And I guess I just felt more comfortable with that at the time. So I started seeing a little bit of progress, you know, started chipping away at that snowball. And that was good, but, you know, I didn't have the earning potential at that point to really start making some serious dents. And the opportunity came along about 1.5 years into my associateship to go out on my own and buy a practice. If there was one thing I did that made all the difference when it comes to servicing debt and kind of getting that economic engine running, it was buying that practice. So of course I wasn't in a position where I had a ton of money sitting around burning a hole in my pocket, and I wanted to spend it on a practice. But you know, I saw it as my opportunity to break into a new level of earning, but also have a new level of control and independence and freedom. And really, that's what it was all about for me. So I did have to borrow more money in order to make money. And in some cases, that's just how it goes. It's like priming the pump on the well, you know. So I was able to find a very affordable practice. And for me, practicing in a rural area has been a blessing. It has been amazing. And I know that's not where everybody sees themselves. I would encourage anybody who's not sure to open your mind to the possibility of working in a rural area. That's where this practice I found happened to be. And the price was so good, I couldn't say no. It was definitely a starter practice, and I had to put in a lot of work over the first 3 years to get it going. But I'm happy to say now that we're in our 4th or 5th year in that business, and it's running really well. And around year 3, things really started to change. I was able to leave my part-time job on the side with a corporate office and just invest myself 100% in my own office. And that's when I really started seeing the income potential go up. And I tell you what, that's really the key. I mean, that's the key to your freedom here, is generating some revenue. And that's not a bad thing at all. All these problems are fixable if you have income. And the quicker you can unlock that, I mean, the quicker you can get to that point, the easier all these mountains are going to fall. So, you know, there's a couple different ways to find great income as a young dentist who's paying off debt. And one is to do a lot of dentistry, and the other is to not spend a lot of money. And I mean that professionally, and I mean that personally too. So from a professional standpoint, you know, learning to run a business and learning to keep your overhead really low is important. I'm lucky that the sensibilities of the patients that I work with are not as demanding as somebody maybe in the city or a suburb. And I put together a very nice practice, but it's not fancy by any means. And I think most people actually appreciate that. They look at it and they say, well, I don't feel like I'm overpaying for things I don't need. I feel like I'm getting great quality service and they're taking good care of me, but they're not being wasteful with my money. So I run a practice that's about a 50% or 55% overhead most months. And what that means is there's 45 to 50% of the dentistry we did, you know, left over as profit. And if you have a healthy profit margin, then you can make some serious payments on loans. I was at a point a few months ago where I was paying about $5,000 or $6,000 a month on my student loan. And so when you start making progress like that, you really start to see that number drop. So going back to when I was in my associateship, you know, I got married, bought a house, started a family, and you know, in some ways you can schedule those things, and in other ways you can't. Life happens, and it depends on your age and what you want out of life. And debt is not the only part of your life. I mean, you have to make decisions about what you want for yourself at certain ages along the way. If you're starting out young in dentistry and you've got many years to grow a family, then maybe you have more flexibility. You can live in an apartment longer and avoid the mortgage and the extra debt. You can delay starting a family, and you know, there's certainly a lot of financial consequence to doing that. But it's not just a money decision either. You know, if it's time, it's time. And the thing about getting married and having the student debt, you know, I had undergrad and dental school debt, and my wife had no debt coming out of her nursing school degree. And all of a sudden, all the debt became all of our debt together. And it wasn't just a personal decision anymore how I handled it. Everything became a family conversation. And we both had to be on the same page as far as what we were going to do to attack that debt and how we were going to get ourselves in a good financial position. So having that trust and opening that communication and everybody understanding what's going on with the finances is very important, you know, as you make decisions as a couple rather than as a single person going forward. So we did buy a house. It was definitely a starter house. I think we paid $200,000 for it. The mortgage was about $1,000 a month. Luckily, 3 years later, we were able to sell that house for a profit, and we took about 75 or 80% of the profit off the house and put it right back into that student loan. So overnight, I saw $50,000 or $55,000 disappear off the loan, and that was such a great day. And those little wins are like the motivation you need to keep attacking that debt, because it's hard when you look at a big number. You never see the end in sight. But I promise you it's there. You just have to keep pushing at it and celebrate those little wins along the way in order to give yourself some motivation. As we were getting started in married life, I read a really good book called The Millionaire Next Door. I would definitely recommend reading that. It gave me a new perspective on how we spent money and what was important and what wasn't important. At the time, we had 2 car loans, and I read the book, and it just changed the way I thought about things. And we turned around and, we sold a car that was worth about $30,000 that we really didn't need. And I was able to go buy a car for about $12,000, which we're very happy with. We still drive it today. And we were able to just buy that outright rather than paying for another loan. And so it changed our cash flow. It freed up money that could be redirected to other things like an emergency fund or to the debt. And along with that, the book just gave me a new way of thinking about, how we spend discretionary money. You don't have to try to keep up with the neighbors for who's got the newest this or that. All those things that we tend to want to spend money on are things that don't hold any value over time. And, if it's a style thing or a fad thing, it comes and it goes. So it changed my outlook from reading the book on, what I thought was important. And we got a little bit more serious, I think, about paying off debt at that point. So jumping around a bit, we sold that house. We moved into what I call our forever home now. And that's when you feel like you really made it. My mortgage now is about 2 times my annual income. And I was doing some research in the last 6 months, actually trying to figure out, well, how much debt is the right amount of debt? And there's no perfect answer, but another resource I'll tell you about is whitecoatinvestor.com. They have a ton of great blog posts, and it's all written specifically for physicians, and they include dentists and pharmacists and vets in that too. They talk a lot about debt to income ratio, and their suggestion is that, your consumer debt should only be, your student loan debt should only be between 1 and 2 times your annual income, and your mortgage should only be about 2 times your annual income. So as you see your annual income go up, depending on your future job, it opens up more and more brackets of what home you should be buying. So just like the previous speaker was saying, there's a way to calculate that so you're not getting in over your head. But as a family, we've been really conscious about, keeping our spending low. As a practice, we watch our supply spending and keep that spending low. It's a lot easier to hit your number when you're not overspending, and when you buy a humble practice, a modest practice. Either that or you have to work really, really, really hard to pay the bills, and that's not fun. That's stressful. I see it with a lot of my colleagues where they overbought. They've got a beautiful practice, but it's very expensive, and it's very expensive to run on a monthly basis. And unfortunately, they become a slave to their practice, where they have to keep servicing those expenses every month and just not able to get a lot of traction and make any headway on other things like debts and mortgages. So I would encourage everybody just to get frugal and find enjoyment in things that don't cost too much money, and get into a practice situation where you've got a high income potential, even if that means of borrowing more debt on the front end to get 100% ownership of something, or to become independent or get your freedom in your own practice. Student debt is the #1 thing that's changing the landscape for our workforce, and I think it's going to really transform the way that dentistry looks in the next 20 years. But I want to tell you that practice ownership is still out there. It's totally possible for anybody who wants it. And don't be afraid of a little bit more debt for the right reasons. Good debt like that is going to become your economic engine that allows you to make progress on these other loans. So it all ends happy in the end. It's been 7 years now out of school, and I just refinanced my loan with SoFi. The Wisconsin Dental Association gives a 1.25% discount on their rate. So I've got everything now on a 7-year repayment plan. It's going to be 3.65%, which is now lower than my mortgage. So all of a sudden, as the income went up and I was able to get that debt number down, I got much better offers on what I could do to refinance that loan. And now I see the light at the end of the tunnel. So I'm more than happy to just keep working on it over the next 7 years and start thinking about other things like saving for my retirement more aggressively, starting a retirement plan at work, paying off more of my mortgage and other debts on some technology we bought, things like that. So obviously this is a huge conversation, but I hope I've given you a little perspective from somebody who's 6 or 7 years down the road, kind of looking back and what I would have done the same and what maybe I would have done a little differently. Thanks a lot.
Great, thank you, Ryan. Good advice and good resources. I think I'll have to add that book to my reading list. All right, so I'm now going to introduce our last panelist, and that is Dr. Jason Watts. Dr. Watts is a general dentist and owner of Watts Dental in Lithia, Florida. He's a consultant, creator of the Try Smiles Foundation, and is an outdoor enthusiast. In his spare time, he speaks all over the country to dental students and dentists about trends in the economy, motivational speaking, negotiations, and building success. The most important thing is Dr. Watts hates bio. So if you want to get to know him, contact him after the presentation, and we will share emails for each of our presenters. All right, Jason, I am going to turn the screen over to you.
Everybody. Oh, there we go. Can you guys hear me now? We're good? All right. How you guys doing? So already we have some amazing content, and I'm going to do my best not to overlap anything. I guess the biggest thing is what I can contribute is that I have a different approach, given that I don't come from a family or a marriage or anything like that. So I'm kind of that solo guy just doing and building my vision and my dream. So I decided, I came out of school, I went to 2 years in corporate, and then I decided to build my own practice. And it was an aggressive decision because I have all that debt that I have, and here's just a small clip of my office. I have this debt, and this debt is more significant than most people's debt. And I earn about $40,000 of interest a year, and that's quite a bit amount. Now, there's always things that you can do that you want to do, or when you look at this, you kind of think, what will $1,000 do this month? What will $10,000 do this month? And I came out in corporate and I was doing very well, and I decided to enjoy my life a little bit. But I enjoyed my life to an extent of knowing my end goal. So what I thought about was working backwards this whole time and really focusing on my vision. What was my vision? What did my vision encompass? Where did I want to be? Where did I want to go? What was the purpose of me doing what I was doing at that time? And it was a little bit different of approach because that vision didn't include paying my dental loans off because, like the two other speakers said, I needed working capital. I was also helping to support my mother through some tough times. I was helping my sister through residency. But I knew what every penny of my income was going to. So I decided to pay off the minimal amount. I went into income-based repayment, and I decided to pay off as low as I can because it was just pure interest. So I just put that on cruise control for a little bit. And the big thing was that as I was building my vision, I decided that things came up quick, a little bit faster than I thought. Initially, my vision was 3 to 5 years owning my own practice. Well, in 2 years, I decided to own my own practice, and I shopped and I shopped and I shopped, and I couldn't find anything that I desired. So I decided to build my own practice. Because I had my vision and because I had my plan, and we're going to talk about it, I was able to leave my job, and I wanted to travel because I don't have kids, I don't have a wife or anything like that. So I went to Europe for 30 days, and I wanted 3 months off. I wanted 3 months off to do what I had to do, move from city to city. You know, I do a lot of Ironmans and triathlons, my charity, so I want to focus on that. And I did. And then a hurricane hit Florida, and all of a sudden, a hurricane hit Texas, then a hurricane hit Florida, and all of a sudden my construction went on a standstill. And what should have taken only about 3 to 4 months ended up taking about 6 months. And for 6 months, I was retired, spending my earnings living through my retirement, my savings account, my emergency fund, and things got a little bit scary. But because I had my vision and I knew what I needed, I knew what I had to plan to, it wasn't really an issue at all. So in your vision, you need to know what your goal is and what you're going to do. The most important things that you really need to know is, if you want to be a business owner, I highly, highly recommend you make your vision as realistic as possible. You need to have your name in your vision, your location, the size of the practice that you want, how much is it going to take to start, and you're not going to know 2/3 of what you do not know. And you need to know the number of staff that you're going to have and things of this nature. The reason is because this builds reality. This builds the feeling that you know what to work towards and you know what you have to do. And it's more real than just paying off your loans in 15, 20 years with that number that you're just throwing money away. So it's important that you have to know your end goal before you know your starting goal, and you work towards that. So my loan strategy was this: pay the absolute minimal payment, because to me, loans were irrelevant. I wanted to get into a practice as fast as I can. And once I got into the practice, then I would make my income for a year or two, and then I would start aggressively paying back my loans as fast as I can. My goal is to be debt-free completely by the age of 40. Now, like Dr. Dolby said, some debt is healthy debt, and I practice on opening another practice or a few here and there. So it really just depends what kind of debt you want to incur. But my student debt, to me, is debt that I want to pay off, and so I haven't decided to refinance because I have so much debt. Now, what another strategy is no rent. You know, when you're coming out of school and you have to move to a location you may have never lived in, I decided to take advantage of their doctor's loan through SunTrust, and putting zero down. I got a house, I paid a mortgage, and after a year and a half, I sold that house and I made quite a significant amount of money. And that actually helped me because it gave me emergency funds for the 6 months in which I wasn't working. Then I always say, or they always say, to create emergency funds for about 3 months of your life. Well, I like to plan for extra because you never know what you're going to encounter. So I planned for 6, and it paid off dividends. Now, my goal was, if I had extra money left over after I'd done opening my practice of those 6 months, then what I'll do is I will just take that lump sum and put it towards my student loans at that point. And that's what I'm working towards. You also need to save according to your business plan. So partnering with your banks, partnering with your lenders, partnering with your contractors, partnering with your equipment specialists, you need to know exactly a number that you're going to need, because the bank's only going to give you a limited amount. And that limited amount is based off numbers in 2009. They're not necessarily accurate. So a big thing about your business vision is you need to know how big your practice is, because mine was way bigger than the bank was willing to loan me, because I have a goal and I have a vision of a 10-year practice. So I want to grow into my practice versus some other doctors, which one down the road from me that I talked to, he only built to what he can afford at the time, and he built a 4-chair practice, and in a year he's already booked out 6 months. So patients are now leaving because he's booked out so far. So you really have to sit down and consider what you want. If you want associates, if you want private practice, if you want to buy a partner, because this is all going to play in your loan payment strategy. And then I picked my time when I was going to leave, because it doesn't matter how long you work for someone else, but you need to know your exit plan, because it's never going to be enough. You're never going to make enough money. You're never going to be close enough to paying your student loans off. You're never going to be ready to incur in more debt. And it's scary. And you sometimes have to take that leap of faith, not knowing how the floor is underneath you. But you need to have an end goal, because in the end, private practice is incredible. I wake up at 5 a.m. I'm in my office sometimes until midnight doing paperwork, admin work, presentations, and it's all worth it. There's a return that you feel that makes all this debt kind of irrelevant in your worries, because you know you're going to be okay. So you can come up with a very successful strategy, and there's people to help you with that. But my strategies in life is my futuristic plans of my business, my vision, and working towards those goals. And then I implement my student loans in there. And I think that's important to me, because if I lived around my student loans or the concern that I'm in debt, I don't know what it would do to my ethics or integrity in dentistry, where a lot of the times you see some stuff from your colleagues and you may be concerned about what happened at that time and why this outcome was the way that it was. So know that it's okay and that debt is healthy debt, because in the end, when you're able to say that you're open, when you have your business plan come to fruition and you have your vision, you're going to be in even more debt than you can ever fathom. But for some reason, it's all worth it. So there is no limitation with a good plan. Tony Robbins says the best strategy implemented at the wrong time will fail all the time. So really analyze your goals, reach out to your ASDA alumni, your ASDA leaders, and get the right connections that you need to come up with a proper plan that fits you. Because no two people have the right plan, but you should have a vision. So create your future, work hard, dream big, achieve well, and just know that it will all be okay. You'll be able to buy what you want. You'll be able to afford what you want, but you need to limit the things that you can afford and the things that you can buy to be as smart as you can, because life is a marathon. It's not a sprint. And your friends who have, or my friends that have 7 Series BMWs or Maseratis, they're sprinting. They're sprinting for luxury. They're sprinting for success. They're sprinting to show off. And I know that down the road, it's going to be the opposite, because I'm going to be the one retired early. I'm going to have my residual income, and I'm going to be debt free when others are trying to just pay for the things that they have versus living with the things that they can afford, and which is more proper. Like that book Dr. Dolby said, which sounds absolutely incredible, and all those apps that Brenda said, which are great apps and everyone should download. So I really hope that that gave it a little bit different perspective and wasn't repetitive. And just know that we're all here to answer whatever questions you need and be whatever guiding light we can down this exciting journey of life. So Danielle, I'll turn it back over to you.
All right. Thank you, Jason. All right. So, okay. So before we open up the program to questions, I just want to share some additional resources that ASDA has that can help you as you're transitioning, working towards graduation and transitioning to your first step in your career. ASDA launched Career Compass in April, and it is on our website. You can see the URL there, and we have resources for graduation, different career options, licensure, postgraduate programs. If you choose to get a job, there's some resources on interviewing, how to find a job, and financial and practice management. So we're continuing to do monthly webinars that are part of Career Compass on different topics. So if there's any topic that you have suggestions, please send them our way. We're continuing to build Career Compass. So at this point, I'm going to open it up for questions. I see that we actually did have a couple of them. So you can bear with me for 1 second. Okay. All right. Our first question is, so I know that none of our panelists went the route of military, but this person is asking if military scholarships are a good options in terms of leaving dental school without debt. And if any of you know dental students that either you went to school with or friends that went the military route and how they're sort of managing after dental school. So I guess for any of the 3 panelists, do you have any response to that?
Yeah, I mean, this is Jason Watts. I have a bunch of friends that went military, and I definitely thought military was a fantastic option if you're a candidate for it. I applied myself, but not being an American citizen, I couldn't get in. The big concern is that military kind of leaves a lot open to not knowing exactly where you're going to live. And for some people, that's more concerning if you have families or significant others. And also what you're going to do is you need to decide what your level of debt is and what your income will be in the military. Because if you're just looking for the most cost-effective way to pay off your loans, when I look at my loans with my classmates who went to the military, I ended up making more than and being able to pay off the debt than they're doing without the debt and having to move from multiple locations. But without question, military offers a fantastic service of being debt free. And for most of them, they're enjoying it because they're relatively younger and they don't mind the travel.
Great, thank you, Jason. The next question, I think probably for Jason and Ryan, but Brenna, you might be able to contribute to this too. So it says, as a new dentist with a new practice, what were some of your obstacles in acquiring new patients, and what methods did you utilize to reach out to patients? So Brenna, even though you don't have a practice, you still had to find new patients.
Mm-hmm.
So one of you wants to start?
Ryan, go for it.
Sure, I can comment on. Is my audio working?
Yes.
Danielle, can you hear me? Okay. I had to get rid of the headset. Sorry, it died. So the question was about acquiring new patients as a new dentist. Is that right?
Yes. And what methods did you use to reach out to patients, I guess, to find them?
Well, I have to give you my answer with the caveat that I work in a very small town. It's about 2,000 people. So when a doctor comes to town, it's kind of a big fish in a small bowl, you know? And word travels fast. You know, word of mouth is, I think everyone will agree, no matter where you work, that word of mouth is your strongest recruiter for new patients. But in my area, the other thing that worked really well for new patients is also signing some contracts with a few insurance companies that were prominent in the area, and actually doing every door direct mail postcards has been really good to us, because I have the type of patient base and the type of community where people actually read these things in the mail. And that probably doesn't work everywhere, but it definitely works in my part of town. We take out a couple simple ads at the restaurants in town, and we sponsor a lot of things in the community, get our name on basically every t-shirt we can. We sponsor a 5K. So, I mean, not everything you do has to be so blatant as far as, hey, I'm a dentist and, you know, we want new patients. Sometimes it's just the repetitive touch from your brand and from your name that people see over and over and over. And maybe 2 or 3 years down the road, when somebody needs that dentist, you know, you're going to be the first name they think of. So there's no, I don't think there's any like perfect solution to getting new patients. It's probably a nice blend of all the above, but internal marketing and word of mouth, very effective. And in my area, community involvement and postcards have been very effective. And we've had steadily about 35 new patients a month since I opened. And for me, that's good. I mean, for me, that's what I need. I know some practices that get 10 a month, and I know some that get 200 a month. So, you know, you kind of got to look at your metrics and your numbers and figure out, well, how many new patients do I need to make the numbers work? I hope that answers the question.
Yeah. Jason, do you have anything to add based on your practice? Because again, it's, you know, different location, different type of practice.
Yeah, and that's I'm not in as small of a town, but I'm in a very proud suburban area where it's a town called Fishhawk, and you know, there's Fishhawk Facebook, there's Fishhawk Trails. It's all coined, and if you live here, you're the Fishhawk person. And I'm actually surrounded by a bunch of corporate dentist offices, and I just opened shop. And what I found the most effective thing was, I have a lot of custom cards that I make for the customer service industry, and I go to meetings and restaurants and socials, and I hand out my cards to everybody. I joined our local chambers of commerce, and what I found out is, at the Chamber of Commerce, I don't actually talk much about my business. I talk about our philosophy, our culture, which is the business, but I also schedule a lot of one-on-one meetings with other business owners to talk about their businesses, because when people know that you care, then they truly start to trust you. Another big thing that I found was having, I just recently started with a strong social media presence, where I was noticing that a lot of our reviews initially were coming in from Facebook. So I started to promote some Facebook ads, and we're getting some strong traffic of patients from there. But just the reviews itself, my patients come in, I invested in a review company called Weave. It's a phone company, and when my patients leave, we can text them, thank you for coming in. Would you mind letting us know about your experience? And they can leave reviews on Google or Facebook, Yelp, etc., as they choose. And what I've been noticing for the close to 45 days we've been opening, we've gotten close to almost 80 reviews on Facebook and Google alone. And it's a perfect 5 stars. So when people in these neighborhoods, they're reading the reviews and they come in and they say, I can't believe that you're perfect. No business is perfect. I want to see it for myself. Or these people on these private Fishhawk Moms Facebook page, these moms go on and they ask, hey, what's a good dentist? I need one for me and my kids. And I find out that I'm being pushed on that on that private page. That builds a lot of traction. So what I always tell my team is that we're in the customer service business. We just provide dental care because our primary concern is 5-star service. And we have a whole plan and strategy that we implement in the office. We go above and beyond for that patient. And when they come in, it's not about what we have or what our practice looks like. We don't have anything special in our office, but we pay attention to the little details. And it seems that those communications reaching out to patients builds greater traffic quicker. So I do a 3-month plan with all my marketing. I've signed up for a few more random things, like maybe this one's useless, but it was only $400 to be on a label for a golf course, like the scorecard for a year, right in the front. So, I'm going to measure these things, and I'd be more than happy to document them and supply them to ADEA down the road. Because every 3 months, we're going to analyze what we've invested in and see our return. But so far, like Ryan said, the Every Door Direct mailers has also been beneficial. It's just not as easy to track. But what we did, which was great, is we put our faces on the back of that postcard. We didn't put other people's faces. We didn't put promotions. We just said, welcome to Watts Dental. We're your local family dentist. And we have our photos on the back with our names. And when they call, they go, hey, am I speaking to Michelle or Pamela? And they know exactly who they're looking at. And we've been getting really positive feedback and traction on that because they say it's nice to know that we're speaking to a person and not just someone behind the phone. And that's what I would say is our biggest return by far.
Jason, would you mind repeating the name of that website you use for reviews? The one that you paid?
Oh, yeah, it's called Weave. So there's several. Weave is actually a phone company and a review company. They do a little bit of everything. And if your software integrates with them, it's really convenient. Mine doesn't integrate with them, but it's really cost effective. So it's a little more work for us, but you can text and everything from there. And there's an app on your phone because it's VoIP. It's all through the cloud based since we're fully paperless and digital office. But there's also one called Podium, which only does reviews, and it's great, Podium, but it's a lot more costly, and it's only for reviews alone. Podium used to own Weave, and they separated, now they're competitors.
Okay, cool, thank you. And then I just had a couple things to add. My practice didn't do any advertising before they brought me on because they had just some challenges. And so once they brought me on, they started advertising, and the things that we've noticed have been the most helpful. First of all, word of mouth, that's going to be huge. If people like you, they're going to tell their friends. And so it'd be nice to all your patients and give pain-free injections, and that'll have a huge return. But aside from that, there is a folder that all the kids from the elementary school have to take home that shows their homework and what they did in school that day. So we paid, I think it's $300 for the year to have in that 2-pocket folder. We are one of the main businesses just on the front of that pocket, and they have to bring it home. They have to show their parents every night. And so we have several families from that. And then our other main thing, I would say, there's a newspaper that people actually still read called the Viera Voice, which is our local paper. And that's probably people in the age range of 35 to 60 business people who read that. And that's been huge. We just put it out, another ad from that, and I got a number of people, hey, I saw you in the paper. So that's find out what your local means of communication are, I'd say, to your community, and see where people actually plug in and plug in there.
Great. So we have time for one more question. I think this was directed at Ryan, but potentially, Jason, you could answer it as well. You mentioned that you purchased a practice about 1.5 years into an associateship. Was it because the appeal of the opportunity that was presented, or because it made more financial sense in terms of the ability to repay your debt?
Can you repeat that last part again, Danielle? I want to make sure I answer it right.
Sure. So I think she's wondering, did you decide to purchase the practice because the opportunity that it presented, or because it made more financial sense in terms of repaying your debt?
I'd like to say at the time I knew that it would make a difference in repaying my debt, but I really wasn't thinking about that. I jumped on the opportunity that presented itself, and the situation was that I found out through a supply rep that this practice was for sale. It had been closed for 6 months. Nobody was doing anything with it. And I met with the dentist who still owned it, but wasn't practicing anymore. And I found out, more about the situation, and the cost to get into that practice and be 100% owner was too good to say no. And I'm kind of an opportunist. I mean, I don't have a real rigid set of parameters that I had to have a practice a certain way. So I started opening my mind to the idea of this particular practice, and I talked to my family about it, and we decided, yeah, that would work. So if you are flexible and you look for open doors, you can find a lot of neat opportunities just by talking to people. A lot of things that aren't necessarily listed, because that's what everybody sees, right? And sometimes you have to kind of create your own opportunity. But really looking back, I'm so glad I did that, because it changed my whole financial world. And now that I'm 4 years into that practice, and I kept talking about the economic engine getting going, I mean, that is the solution to your debt problem. It's not picking away at it in little bite-sized pieces. It's generating revenue, and with revenue, your problem is solved. So becoming 100% owner of a practice and getting that going and thriving is what changed my income dramatically, versus being an associate and kind of taking whatever cases I was given. So yeah, looking back, if I had that insight at the time, I would have seen it. I would have recognized the opportunity for what it was, a chance to really take over my financial life and take care of the debt. And I probably would have said yes for that reason too. But yeah, looking back, I think it was a little bit of both. That's a good question.
Great. So Jason, what about you? What was sort of the driver of your practice? Was it sort of financial stability or an opportunity, both?
That's a great question, and it's multifactorial. I think the biggest thing is that I was doing very well in my corporate job, and regardless of how well I treated people were still getting discouraged by how other people within the company were treating them. And I got really tired of patients telling me, hey, you're great, we love you, but we can't deal with the team anymore, the billing issues. So I said, why was I working so hard for someone else when I could work half as hard for myself and do just as well, because I was really in tune with all the business numbers. So it came to finding the location and in my vision, how much I needed to save for how big of a practice I wanted to have. And once I hit my amounts in savings, I knew that I had to go to start. So as soon as I decided that I wanted to start, which was from day one of working, I always put a portion of my income away, usually about 20%. I just always took the 20% of my paycheck before I even put it away. And, excuse me, once I had that security and I knew that was in my bank liquid, physically can just take out, I knew that we had options here to move forward and start being aggressive as we possibly could. I started to partner with somebody and look at a few practices, but what ended up happening was they backed out right before we bought one. So it kicked me back about an extra 6 months later than I wanted to. But regardless, I still got the practice I wanted. And because I knew I had the financial stability that I planned for. Can you hear me?
Yes, sorry. I was muted for a second.
Okay.
Yes. So thank you so much. So I think It is 8:01. That brings us to the end of the program. I would like to thank everyone for participating. Thank our presenters for all of the great information and advice. Their emails are shown on the screen if you have any additional questions. My email is up there as well. So again, this webinar is recorded. The link will be sent out. But if there are other topics that are of interest to you related to graduation and preparing for your career, please send me an email, and we will look into organizing our next program. So thank you so much, and everyone have a great evening.